The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the February 20th, the thirsty Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, well, we've got you covered there. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, and, of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to La Show. Right now, we got all indices with the exception of the transports in the red. The Dow is down 202, the S&P 23, the NASDAQ 100, 134, Russell's off 4, semis 37, New York Stock Exchange 61, Wilshire off 221. The trannies are up 48 points. That's about 0.4% to the upside. Spot volatility index well above the 50-day exponential moving average, but you've got a one-day rate of change of 12.5% out there. So watch the end-of-day reading. That means the reading at 4 o'clock. If you have a one-day rate of change greater than 4%, and especially if you trade futures, be anticipating, looking for what typically would form would be the Rhodes Momentum Indicator bottom panel, and anticipate a bouncer bottom to form in the marketplace. So we'll continue taking a look at that. You've got gold up $8. Silver's basically flat out here. Light sweet crude is not flat. It's up 56 cents, I believe, trading above the top of that daily profile. So we'll take a look at that. Natural gas basically flat out here. T-bonds up almost 1 full point out here. So let's begin the day. We had a request by Peter in the den to take a look at just the general markets to begin the segment here. And so we'll do that. And Peter wanted to, I believe, start with the ES Mini. I had posed the question in the den earlier. I pose it to you too. Why did the ES Mini, in the thrust downward, why did it stop where it stopped? Why did it stop precisely, not approximately, not just in the general area, precisely? Why did it stop where it stopped? That is exactly right, Jay. The TAS market profile. We gave you this level yesterday, and I think it was the day before, but yesterday was the confirmed new market profile that had formed. So if you want to understand the power of these profiles out here, and newsletter subscribers knew that if one level was broken in the ES Mini today, this morning, to anticipate a move down. Now, we didn't know it would get down there today to test it, but if you look at the actual low of the ES Mini today, it is 33.29 and 1 tick, a quarter. If you look at the bottom of the profile, it reads 30, that we're talking about the daily, 33, 39, 10. Well, it can't trade to 10. It can only trade in quarters out here. So it truly hit it right to the tick. Now, this is a bullish structured profile out here. If you're a person that has a bearish belief about this market, close out that trade now. No, actually, it should have been closed out at 33.39 out here. All the market is doing is consolidating. My last comment is kind of a little bit, but you really should consider that. You really should consider that. You see, you're inside in the ES Mini, Peter, everybody else out there, a bullish structured profile. And what price did this morning was it pushed right down, right to the tick, and found support where it was supposed to find support. Now, if it closes below support, then we have a whole different game to take a look at. Of course, in this case here, the game would be, well, we'd really need to see what happens at the 33.15. But all that's taken place so far during the day is nothing more than the old knee-jerk reaction to the downside right to a key level of support. I wish I had been around at that time. Unfortunately, I wasn't out there. But that's neither here nor there. Now, if we take a look at the daily time frame chart out here, so we're just consolidating. No breakout to the upside, no breakdown to the downside out here. If I take a look at the daily time frame chart out here, price will need to close above 33.79 today to keep us in full-blown bullish formation. Otherwise, all we really have going on right now is just a sideways consolidation in between its profile levels, the top and the bottom. Peter, I can't make it any easier than that. The only thing that I can add to this is watch the spot volatility index 1-day rate of change. What's Stevie mean by that? If you're a longtime listener, you already know and you were already planning for this, but it basically comes down to this chart right here. And on this chart right here, the blue arrows represent 1-day rates of change greater than 10%. And what you will see, in not every, but in most, and when I say most, I'm not talking about the flip of a coin. I am not talking 51-49. I'm not even talking 60-40. I'm not even talking 70-30. I'm talking to give yourself a probability and being able to anticipate and understand what the markets are communicating to you is that if you see a 1-day rate of change greater than 10%, then the very next thing that you want to do is you want to be able to come over overnight in the overnight hours. I don't know whether it'll be at 9 o'clock at night or 3 in the morning, but in the overnight hours, what you're looking for is some kind of bottoming pattern in the 30-minute ES. Now, if we're going to see that, and I don't know that we will, the spot volatility index may very well close with less than a 1-day rate of change above 10%. And if that's the case, then what I'm about to say still applies, but it doesn't apply for the same reason. That would be if we were to see some type of bottoming signal out here. Now, what that would require price to move below the low of today, so below the bottom of that daily profile, but to do it on a 30-minute time frame chart and do it with less relative energy. And then we'd be looking for the bullish reversal candle. Now, look, if you take a look at this 30-minute chart, you can see the Rhodes momentum indicator topping patterns that we're forming out here. You can see it on the top. You can see it on the bottom. It's a pretty simple thing. It's got very specific rules. If you follow those rules, you're going to do yourself a whole world of help out there. The profiles, what we use each day, they're really extraordinarily valuable tools, and they help you and I assess what's going on. Because what we can do is we can just simply sit back here as technicians, and we can identify one of the most important things for you and I to do is understand where is support and where is resistance out there. And then it's always the market experiment. Does it hold? Does it not hold? And then what does that piece of information give to us? Well, what do you know at 1:14 in the afternoon right now before we go to this break? What do you know at 1:14 in the afternoon before we go to this break about what has transpired in the markets today, even when they were down big numbers, bigger numbers than they are right now? All that this was a test of support. And this is a number you knew yesterday and the day before, and you certainly knew it this morning. Thank you to John Logan and the team at TAS for providing us this great, unique insight into where support and resistance lie. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So, yeah, back to the ES Mini. Peter, you pointed out, Jay added a piece of information, which was about 3369, which is so far the bounce in the ES Mini is a resistance area for the 4-hour time frame using the market profiles out here. We can also see, using just simply the 30-minute time frame chart, that 3369 is also the oscillator on change line out here. So there's a key, 3369, thanks, Jay, is certainly a key area of resistance. Watch that. If price closes above that, well, then price here, well, where could it head to? I mean, I won't spend the time trying to figure that out, but just watch 3369 as as this hour here unfolds. Now, what Peter also wanted to look at was gold and treasury bonds, I believe. So let's go do that, and then we'll go start taking a look at the questions out here. So with regard to gold, you can see the gold moving higher in all major currencies. It's backed off the highs so far. So where is gold headed to, or has gold already hit where it is headed to? It's always good to understand that. So we also use tools like our horizontal trading ranges. Those brought to us, in essence, referred to as primary trading ranges by Bud Rolfs. Now, Stevie uses the same principle, but because I've automated it, it gives us the ability to do some things that Bud wasn't really able to do visually by hand with certainty. In this case here, my system goes out and absolutely tracks the largest congestion, the two largest or three largest, actually, congestion zones out there so that we can figure out what those proper horizontal trading ranges are. And it does it for both weekly, well, it does it for daily, weekly, monthly, and actually I can do it for intraday time periods as well. So if we take a look at gold, and you were going to look at this and you were a believer in these horizontal trading ranges and how they can act as support and resistance as well, I would have asked you the question, or maybe we did this yesterday or the day before, where is the next level of resistance inside of looking at a weekly time frame chart of Goldilocks? And you would have shot back to Steve-O. You would have said 1628.20. That's what you would have said. Why? Because that's the weekly horizontal trading range. So that's a key level to be watching out here, Peter. It's possible the rally in gold has ended. Why could Steve-O say that? Well, today is also going to be bar number 8 of a TD setup 9 count. And what we know is that on bar number 8, 9, or the bar following 9, as long as either or any of those bars, 8, 9, or really let's just call it 10, are the highs, and they qualify as a TD9 count pattern. We can see where gold had last top, wave number 7, as well as a TD9 count out there back in, I don't know when the date was. I'll just give it to you right here. It makes it a little easier. That was on January the 8th out here. So, Peter, we've got price moving higher, doing less relative energy. You're up at resistance, a key resistance level, weekly horizontal trading range. Bar number 8. Does it mean take action? Well, the action I would be taking if you're long gold, if you are long the mining equities, would be just simply to have some stops in place. Maybe adjust your stop out here. So it's still, the chart for gold, still bullish, but yet it's running into prior resistance levels as well as prior topping areas, and we're really in. We've got another topping or 2 topping patterns that are present at the moment inside of Goldilocks. So that's what I see going on there. If we take a look at T-bonds out here, so let's go take a look at Treasury bonds. Treasury bonds also moving higher and doing so in all currencies out here. There is, you and I, we covered this yesterday. We'll cover it probably many times in the next year, but certainly in the next several months out here. What's going on here, folks? Very simple. It is, like we discussed yesterday, and this was not made up stuff. This was just simply in looking at the facts. This was just simply using the old dragnet, of understanding what the markets are doing globally. Now, this was the simplest way for me to be able to show this to you, but you can see this, the rate of change since the beginning of 2020, and we can see where it is that what's performing. We can take a look at the global flow of capital by taking a look at what's performing and looking at it in all the major currencies out here. So we can see here still the NASDAQ or the NQ leading the charge to the upside, nearly 10% to the upside, S&P 4, Dow 2, Russell 1, Treasury bonds up 5, gold up 6% out here, the U.S. dollar up 4%. What the heck is going on? Then go take a look at the Shanghai. Go look at the Hang Seng. Go look at the Nikkei. Go look at the DAX. Go look at the FTSE. It's very clear where the concentration of capital is. And just understanding that should help you and I and everybody else just simply get rid of the whole idea of worrying about whether there's volume or there's not volume out here. Or if we believe that it's just the Fed. It is not just the Fed. For goodness sakes, out here, there's a global flow of capital. There is a whole group of people in Japan and in Europe that are saying, I sure like that good old US of A. And I like that king dollar out there. And I think I'll find ways to park my assets and to park my ass into those instruments out there. If we take a look at the U.S. dollar index, this is an easy thing to look at. Here is, now I've got the continuous contract, so forgive me for that. But in essence, this is showing the same things. What are those same things? Look at the beautiful Gartley buy pattern that formed out here. I mean, perfect Gartley buy, which then went on to go ahead and make a TD9 count top, do a 2-day knee-jerk reaction, a little bit of a retracement to set up that C point for the A to B equals CD to the upside. Price is now above the 1.272 expansion of that. That says the old king is on its way up to 100.376. I don't have any kind of topping pattern. I don't have any kind of Rhodes momentum indicator signal out there. We do have a good old A to B equals CD pattern. Now, if there's a bearish reversal candle that forms, then that's going to generate a different signal. But that's like playing musical chairs and actually knowing when that music is going to end. And I don't know when that is. I know when the music's not playing, it's ended. I know that the move higher in the U.S. dollar index, especially because of the A to B equals CD pattern, which is also creating another butterfly or, well, it's a butterfly pattern, at least at this stage here, that I'm looking at on this chart. If we pull it back further, I might see something else. But my point is that until you see the bearish reversal candle, then what price wants to do is continue to move higher. Why? Because people want the Sam heck out of the euro. It's really just that simple out here. The king is just simply moving higher out here. And it was really, it's just the patterns. Okay, so people, traders, investors, they want to get in U.S.-based items. Don't you think is it odd? Somebody else knew about that support level on that TAS market profile. Certainly you did. It's not just us here at TFNN, right, that understand this? No, it most certainly is not. But all this stuff is easily understandable, and it makes playing the game so much easier when we know about these levels out here. So, Peter, in summary, The trend is still in place for the ES Mini, for the S&P 500. Gold, we should look for this to potentially top. It's still bullish. No confirmed signal yet. If it is going to top, it is likely going to be tomorrow or the next day, or maybe today was the high. But we need some type of confirmation. We don't have that. We've got folks running into treasuries as well. That's just another way of getting into into the U.S. dollar, into U.S. currencies out here. And we took a look at the U.S. dollar, and it's long and it's strong. It just goes along with the entire message of the flow of capital coming into the hot spot. The place, believe it or not, where there is the most confidence. And that's in your bank. That's in your wallet. That's right here in the good old US of A. Steve Rhodes with TFNN. We come back. We'll go take a look at those questions that have come in, whether it's in the den or by email. And see in just a few. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as our #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look at one of the requests out here inside the Tigers Den. I believe was Mr. Bill that asked about Akamai. if I'm pronouncing that properly, technologies out here. So we look at the daily, the weekly, and the monthly time frames up here. We can see the prices above resistance levels, that being the top of the daily, the top of the weekly, and the top of the monthly charts out there. So let's go take a look at my other charts, see what kind of market conditions are present. Is price moving higher, doing with energy or not? And the answer to that question is, well, you know what Akamai has done out here, Mr. Bill, it's gotten back to where it had previously topped. It has that Rhodes momentum indicator signal that's present. So if this does go on to make a higher high today or tomorrow, above the high from February 12th, that signal will still kick into place. At least it looks like it will still kick into place out here. That's the only potential topping signal that I see on a daily time frame out here. Price above Stevie's green line as well. So the daily chart is still bullish, just up against a resistance area. If we look at the weekly time frame chart, let me populate this with the signals. Price moving higher, doing less relative energy out here, most likely. But I don't see any other. It's going to be week 8 of a TD 9-count pattern out here, but we don't have a higher high, so it wouldn't be this week that would identify the high. Would it be next week or the following week, potentially out there? But at this stage here, everything still looks and remains bullish. That's on the weekly time frame. On the monthly time frame, as we take a look at this equity, looks like it could be in wave number 4 or wave number 3, depending on where we begin our counts out here. But again, I don't see any kind of a signal of a top out here. So Akamai, AKAM, let's just start with the symbol out here, up against some daily resistance. That's what we've got, prior daily resistance out here. But if we can clear that area in the 103, looks like about 103.30, I'm just rounding out there, that'll give you a message that it's going to continue to move to the upside. So I hope that helps you out. Thanks for writing in and asking. We've got a question out here from, let's see here. So this is interesting. I have 2 questions about gold. One, where do we see gold miners starting to go up in the spot volatility? So where do you see gold, basically? And we sort of covered that. And there was another question, this one coming in from a bill, I think another bill out here, that's saying, can you give us your thoughts as to why the GDX are mostly flat since their highs in 2016, while gold has gone substantially higher during that same time period? So let's try to incorporate those, because else, we sort of covered gold there, so I think I got it. But let me just kind of combine those 2 questions, if you will. So let's get rid of the Ninja Trader charts out here. Let's go take a look at first. You gave 2016, Bill, as a time frame for us to go take a look at. So what we want to do is we want to test the hypotheses that gold and the GDX aren't behaving properly. So how do we do that? Good question. The first way we'll start is this chart right here. So this chart right here. Now, what I'm doing is this is a weekly time frame chart. So each of you could do this. You may have the same tools on your system. I don't know. But if we take a look at where my cursor is at right now is the week that began of August 2016. And that's the high that I believe that Bill is referring to out there with regard to the GDX. So that's what we're going to use as the high out here for both the GDX, in essence, or the beginning time frame, to take a look at the rate of change between the gold contract and the GDX, to see what we see. And here's what we see. We just have to look at the very top panel, because what it does is if you look at the bar that I'm on in my little window with the red around it, you're going to see that bar index is minus 42. That tells us we're in week number 42. So there's 42 weeks that we want to take a look at to understand its rate of change. It's a rate of change tool out here. I apologize. It's a monthly time frame I'm looking at. So I'm looking at the monthly time frame. So it's 42 months. Duh. 42 weeks, and we're going back to 2016. Apparently nobody was home, but I caught myself out there. So we got 42 months out here. Now, that's what we're taking a look at in the upper portion. You got gold on the top line. Its rate of change in that time period is about 15%, 14.82. The GDX, however, is outperforming. So Bill, I have to take issue with the statement here that gold is just simply outperforming the GDX. It's not what I see when I just simply take a look at a simple rate of change out there. Now, the importance here about understanding the correlation out here And these two are correlated. Now, if we take a look at the GDX, that's the top panel. The gold contract, that is panel number 2. And then the correlation 2, which is down below. I'm using my 5-day correlation. The lowest I can get to is I believe it's 5. Maybe I can get to 3. I don't know. But I'm going to stick it with the 5-day correlation. When bars are above the 0 line or out there, maybe it's hard to see. Maybe it's not too hard to see. I don't know. But when it's above 0, tells you of a directional correlation on average out here. And you can see, just using the shortest time frame, or I believe the shortest time frame I can, it is definitely directionally correlated out here. And that's all that you really need to know. Now, what I will share with you is when gold really takes off. And I don't know where to go if I go back to this chart out here. When gold really takes off, when it really bottoms out here, and I'm not saying that it hasn't, but when it really bottoms, let's take a look at a daily time frame chart. I mean, on this GDX out here, and this has just really been consolidating sideways out here. I don't know where to begin what here. Let me just get back to the thought. When the real moves in gold, we'll see the GDX, and this is where I think Bill is coming from, will outperform the rate of change move in gold by typically 2, 3, 4, 5 to 1. The real bullish markets, it's typically a 5 to 1 move out here. So I don't know, in taking a look at this, so we looked at the bigger picture out there. In the bigger picture, I think that gold and the GDX have been behaving the way that they should. They're directionally correlated. The rate of change is very similar, 15 versus nearly 17 out there. So we're not going to worry too much about that 2% out there. And so I hope that helps you out. And so back to Elsa's question. I think Peter and I and you we covered gold before I had seen your question out there. So we'll just go ahead and stop there and go on to our next question. Next question is coming from Hector and the fuel injectors. And Hector says, is today's pullback in the SMH a gift from the trading gods out here? So let's go take a look at it, see what we can see about the SMHs, and we'll pull up the daily time frame chart. Was it a gift? What it wasn't was it didn't come back on a daily time frame. That's what we're looking at out here. It didn't come back to a level of support that you would ideally like to buy it at. Yes, it came back into this little rising window that formed over the past couple of days out here. And so it's held that gap. And these gaps can certainly be used as a sign of strength out there. But the ideal, or the more ideal buy, Hector, would have been if the SMHs had pulled back to 142.47. 142.47 happens to be the TD9 count breakout level. It's the center of its daily profile. If that's not the buy area, then it would be 139.72, the bottom of the daily profile. But I don't have anything on a daily time frame to suggest that this was the buy. Now, let's look at the weekly time frame. Maybe price was just testing its green line out there. Well, voila, behold, if you're going to just simply take a look at the weekly time frame charts, and that is exactly what unfolded as we speak today. So was it a gift? The ideal gift is one that really comes back to a key level of support and holds, very much like the ES Mini did earlier this morning. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Let's continue looking at currencies. The reason we're going to do that is because Ruby in the Tiger's Den wanted to take a look at the Australian dollar out here. So Ruby, Ruby is saying, hey, look, she's looking for a buy. She's looking for some type of entry into the Australian dollar. Now, I've got a 15-minute delay out here, Ruby, so my apologies for that. But here's what we can see. Now, this is a bigger picture. This is a long-term picture out here of the Australian dollar. And just from a simple trend line standpoint, coming back from the lows out here now, are these the all-time lows? Let me pull this back. Maybe the low back in April of 2001 was the low at about 47 cents, 0.4778 is the number. But here's what we know right now in a bigger picture. This thing looks like it wants to continue to move lower. Now, it's a quarterly time frame out here. This is below every kind of trend line that I can think of that we would draw on this. And so just simply from a swing point standpoint, this is suggesting we'll go look for what's going on a shorter term time frame than a quarterly basis out here. But, looks like this could be headed back into the lows of October of 2008. That's what I see on that bigger picture. We'll change monthly picture out here. I'll get some different trend lines, but still not much. Everything is below every trend line that we would draw out here for that. On the weekly time frame, let's see what we've got. Do we have any kind of support? And the answer is no. We just start on the daily time frame. Let me go ahead and put this in here as well. And just normal trend lines that each of us would draw. I've just got this automated so that I don't have to sit there and draw lines and waste your time out here. So it's below everything. Now, what I'm going to do here, just because the futures contract, now I have to use the continuous out here, Ruby, to do this exercise to go into the longer pictures as well. To get the data versus using the March contract. So I'm using I'm using the futures contract just to look for any type of pattern. So you can clearly see an A to B equals CD pattern that could also be forming. It did form, and we did have a little bit of a bounce out here. So that's a pattern that is present. With regard to wave counts, I like to look for wave number 7, where only the highest potential wave count that I've got in the daily time frame to the downside would be 5. That would be letter E out there. Prices below a TD9 count breakout level. This is the daily time frame, 0.669 890 out here. So that's not good. Let's go look at the weekly time. So I don't see a bottom signal, which was really your question. I don't see it on a daily time frame. We just looked at all types of time frames out there and saw that key levels of trend line resistance have been broken. On the weekly time frame, in the futures contract, we could have gotten, or we did get wave number 7. That was a couple of weeks ago, but prices below that, so that didn't curtail a move lower. Prices below Stevie's red line, that's bearish on the weekly time frame. On the monthly time frame, I don't have any kind of a signal out here. So the bottom line is quarterly time frame, don't have anything. Hourly time frame, I don't have anything. Yeah, so as far as trying to help you to find a bottom, I can't do it because there's no bottom signals that I can see for us. So thanks for writing in and asking inside the Tiger's Den. That was from Ruby. Let's go out to Kansas and speak with Robert. Robert, thanks for calling. Thanks for holding. How are you today?
I'm doing great. Thanks for taking my call. I was wanting to know if you could look at X or U.S. Steel for me. I don't currently have a position, but I'm interested in taking a long position. And are you seeing bottom signals?
So let's take a look at U.S. Steel. Give me 1 second to switch over to my 3 time frames for you. Let's give you the full Monty, the full picture out here. And so with regard to U.S. Steel, it's possible that it had bottomed, but if it has bottomed, one of the things that you're going to see, and I'm just looking at the daily time frame chart. I haven't asked you what your time frame horizon is and so forth, but what it's done today so far, it's formed a brand new daily profile. So today's the day. And if price can close above the top of the profile, so far it's tested and rejected that level, Robert, which is 927. It's trading at 924. Does it matter if it's just 3 pennies below that? It sure as heck does. It does. So right now, it has not broken above a key resistance level that's been testing. So we can't really call it a bottom just yet. We'll go back and take a look at our other charts. On a weekly level, price is trading below the bottom of its profile. And on a monthly basis, that's the same thing. So we're going to have to see some type of bottom pattern on the daily. And then what it's going to require is going to require a close above, before you would take that long, you want this to prove itself to you, a close above 927, okay?
Okay, that's great.
All right.
Do
now
you
let's
have
go look
time
to
for
see if
one
it's
other
bottomed.
question?
Let's go look to see if it's bottomed. If there's a bottoming signal, because we like to see a bottoming signal. And one of those signals that I have out here 2 days ago, was wave number 7. That's letter G. We also had price moving lower, doing less relative energy. No bullish reversal candle out here, but you got that wave number 7. So if price closes over the top of that box, what it's suggesting to you is this could be a trade or an investment at this stage with a move up to about 1107. So 1107 would be your price target. That's what I see on the daily time frame. The weekly time frame is showing also the potential for a Rhodes momentum indicator bottom. You already have a bullish engulfing candle and prices above Stevie's red line, which is 899. So the weekly is giving you a nice signal, but you won't know until tomorrow until you see how that ends. But so far we've got the bottom on the daily and on the weekly. We're just waiting for price to close over resistance. And on the monthly, what price has done is pulled back to its breakout level. And that breakout level is 852. And so far, that area is held. So we're seeing real signs of potential bottom in U.S. Steel. Just let price close above its daily profile to confirm that for you. Does that help you out, Robert?
That is super fantastic. Thank you.
That's what we're here for. Here to serve you. Now, it sounded to me like you had another question. Let me know what that symbol is. We've got another caller on the line, and so I'll go to him. And then if I can get to your symbol, I absolutely. What's the other symbol you wanted?
MJ.
MJ. Okay, so we're going to try to squeeze MJ in. So listen for the rest of the segment. Let me get to that other caller, and then in that last segment, I'll probably be able to get back to it. All right?
Perfect. Thank you.
You bet. Thanks for calling. Let's go to Jim and Paul Marburg. Jim, thanks for calling. Thanks for holding. How are you doing this afternoon?
I'm doing great. I'll try to make this quick for you. I'd like to look at Disney. I'm showing a 9 count. I know it's been slightly going down. The downtrend is in place since about the 2nd of December, and I'm just kind of trying to figure out where the bottom might be in Disney.
And so you're showing the, give me a second here. So on the 9 count,
on a daily chart.
What time frame are you looking at?
A daily.
Daily. Okay. So yesterday was bar number 8. Today, if price closes 1, 2, 3, 4, closes below bar number 5, that level is going to be 140.90. You'd have a confirmed. Well, I can't really call it a confirmed just yet because what I still use, Jim, is the low would need to form on bar 8, 9, or 10. And right now, the low of that count is on bar number 7. What was the rest of your question? I apologize.
Oh, so that's all right. I'm just kind of looking for a bottom, wondering where Disney might bottom.
Yeah. Okay.
Yeah.
Let me see out here. So give me a second. Boy, the weekly's got the same kind of pattern as the daily. That's kind of unusual out here, but price below the daily profile. And Jim, we're just about to go to a breakout here. So let me keep looking at this. I'm going to go look at MJ as well, but stay on the line. We'll come back to you. But I might open the segment up with just giving the parameters on MJ, okay?
That's fine.
Great. We'll be right back in just a few.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So back to Robert's question about MJ. That's the alternative harvest ETF out here. This may have bottomed. And I know you want something more definitive than that. And I just can't go through all of the signals out here. It's showing the potential for a bottom. But here's what it's really showing you right now. You've got 2 days, 2 closes above the top of its daily profile, which was 1639. And this suggests to me that it wants to continue at least its consolidation pattern out here. You can see the consolidation, if you will. And that would get priced back into the 18-ish type area out here. If I were going to use an exact figure, it would be 1855, although not shown on this chart. That happens to be its TD 9-count breakdown. So let's go back to Disney and to Jim out here. So, what I'm struggling with here, Jim, is trying to identify, is trying to be able to conclude that Disney bottomed back here on January 30th. You've got price below both its daily and its weekly profiles out here. And that just seems to suggest to us that sellers are still the ones in control. Maybe price is going to take a run back for those lows of January 30th. Maybe it's going to go lower than that, even though you've got a TD 9 count on the weekly and on the daily. It appears to be forming. Still with price being below key support levels, which now appear to be resistance, the bottom of that daily profile. I'm going to hold off. I would suggest to hold off out here. If you're looking for an ideal buy inside of Disney, if we were to get down there, it'd be about 130.51. But we'll have to take things one step at a time. Okay?
Yeah, I appreciate it. That's really what I was thinking too. That it had more to go on the downside, and I wasn't really ready to buy. Just feel like I couldn't figure out where the bottom might be.
Yeah. So,
sure.
what it did on the daily chart, it made that 7th wave move. That was on January 30th. So it really did bottom there. But then what it did was it ran up into resistance. Resistance being its TD 9 count breakdown at 147.95, the top of the daily profile, and then it gave it up. So maybe this is just consolidating sideways. All right. Thanks so much for calling in.
I appreciate you.
You bet. That was Jim in Palm Harbor. Of course, this is Steve in sunny Delray Beach, Florida. But the show is over, folks. So have a terrific Thirsty Thursday. Stay tuned for 2 more great hours, and I'll see you on Fantastic Friday.
Since